I want extra time, Mr. Chairman.
I know, sir. I know.
Consider these 5 minutes of parliamentary inquiry. Professor, what's a sock puppet?
I heard the reference from Senator Warren.
Yeah, what
earlier.
is it?
I'm not sure I know. I think
Okay.
it's that thing you stick your hand in.
Yeah, kind of like this.
Yes.
What's a human sock puppet? Isn't a human sock puppet somebody who'll do what somebody else tells them to do?
I think that's what the senator was trying to suggest. I think that
gonna
was
be
the innuendo.
Are you going to be the president's human sock puppet?
Senator, absolutely not.
Are you going to be anybody's human sock puppet?
No, I'm honored the president nominated me for the position, and I'll be an independent actor if confirmed as chairman of the Federal Reserve.
My friend Senator Warren, and she, as my friend suggested.
All right, guys, this hearing kicks off with tension already in the air. A simple request for extra time quickly turns into something sharper. Questions about influence, control, and loyalty. Then comes a phrase that changes the tone completely. Sock puppet. At first, it sounds almost laughable, but the meaning lands hard. A human sock puppet. Someone controlled behind the scenes. And just like that, the atmosphere shifts from routine questioning to a direct challenge. Is this nominee independent, or just another political extension? The denial comes quickly, but the suspicion doesn't fade.
That, I wrote it down, you will use your power. You might use your power to bail out your friends if they get in trouble. Kind of like President Biden did with Silicon Valley Bank and Signature Bank. She didn't say the last part, I just did. Are you going to do that?
No, Senator.
Okay. The ethics folks, they've cleared you, but they've said you got to sell some assets. Is that right?
Yes, sir.
Okay. And these assets that you have, you can't just hold a yard sale, can you?
No, not for most of them, sir.
Okay, so it takes a reasonable period of time, right?
Yes, sir.
And you've promised to sell them, right?
I did.
And if you don't sell them, we'll know, and the ethics folks will know, right?
Yes, I'd be in.
Now the pressure builds. The questioning moves from accusations to power, real power. Allegations surface about potential bailouts, favoritism, and echoes of past financial rescues. All right, this is where things get serious. The nominee is pushed. Would he protect allies if crisis hits? The answer is firm, no. But then ethics enters the battlefield. Asset sales, compliance rules, and legal obligations are laid out clearly. This isn't just about words anymore. It's about accountability. If he breaks the agreement, everyone will know. And that public exposure becomes a silent warning hanging over the entire exchange.
Violation of the ethics agreement if I refuse to sell them.
But you're going to sell them, right?
Yes, Senator, I will.
Okay. Can we agree that politicians have the right to offer you advice about what to do with interest rates?
Senator, we can agree, and it's not something that I would shy away from. I've heard many senators from this very committee in years past express strong views on interest rates.
Okay.
Humble central bankers should be listening and then making their own decisions.
Some politicians matter more than others. And generally speaking, presidents matter, their opinion matters more than, say, a senator. President Trump has offered his opinion about what you ought to do with interest rates. Is that right?
Senator, he is not.
All right. Now we step into the core battlefield. Interest rates and political pressure. The question is simple on the surface. Should politicians give advice? The answer, yes, but carefully. Because here's the reality. Some voices carry more weight than others. And when it comes to influence, presidents dominate that space. This isn't subtle. It's a direct acknowledgement of power hierarchy. Every president has opinions, and they're rarely neutral. The tension here isn't about advice. It's about whether that advice quietly becomes expectation or even pressure behind closed doors.
Made his opinion on that a secret to anybody.
Yeah. And every president has that you're aware of.
Yes, and they all tend to be in the same direction, Senator Kennedy.
Okay. Now, the problem is, can we agree that your credibility as Fed chairman is the most important thing you have?
It's the most important thing to me, it's the most important thing to the institution, and it's the most important thing to the successful conduct of policy.
Okay,
If the
that's
markets
that's a
think
yes, right?
Yes, Senator.
Okay. The problem is that President Trump has said he's not going to appoint anybody who wouldn't agree to lower interest rates. Have you agreed with the president that you're going to lower interest rates?
Senator, I'm glad you framed it that way. The president never asked me to predetermine.
Now we hit the credibility test. All right, guys, this is the moment everything revolves around. The Federal Reserve doesn't run on force. It runs on trust. Market confidence is everything. Without it, policy collapses. The nominee agrees. Credibility is the foundation. But then comes the real problem. Public statements from leadership suggesting interest rate expectations. That creates doubt. And doubt is dangerous. Because if markets believe decisions are politically driven, the entire system weakens. This isn't just a question anymore. It's a warning about what happens when independence is even questioned.
Commit, fix, decide on any interest rate decision in any of our discussions, nor would I ever agree to do so.
So the president has never sat you down, looked you in the eye, and said, here's the deal, Scooter. I'm going to appoint you, but you got to agree to lower interest rates. That didn't happen, or did happen?
The president never once asked me to commit to any particular interest rate decision, period, and nor would I ever agree to do so if he had, but he never did. I was honored he nominated me. Like everyone else in the committee in the world, I've heard his view on interest rates. It sounded very similar to me to every other president in economic history that I've studied.
Okay, I've got.
All right, now the spotlight gets even sharper. A direct question: was there a deal? Was there pressure to lower interest rates in exchange for position? The answer is clear and repeated. No commitments, no promises, no pre-decided actions. And that repetition matters. Because in moments like this, consistency is everything. The nominee distances himself from any form of influence, emphasizing independence again and again. But here's the tension. Public perception doesn't always follow private truth. Even without a deal, the suspicion alone can shape how every future decision is viewed.
One more question, because I'm about to run out of my parliamentary inquiry time. I've heard your argument the last few months about artificial intelligence has made us so productive, labor so productive that companies don't have to raise prices. Therefore, inflation isn't a problem. Therefore, rates can be cut. Do you really believe that right now?
No, that is not how I would characterize the story on AI.
Okay, but you've said what I just said, haven't you?
I've said that this is the most disruptive moment in modern economic history in the U.S. and the world. I've said that artificial intelligence, AI, short
Okay,
for
let
American
me stop you
ingenuity,
because
can have a big
the
effect.
chair's going to cut me off.
Oops, sorry.
Here's my worry, that a lot of this stuff about artificial intelligence making us more productive is a bunch of hype by people who want to sell stock in an IPO. Okay, I'd be careful there.
Yeah.
Thank you, Mr. Chairman.
All right, final stretch. And the conversation shifts to something bigger: artificial intelligence. Now, this is where economics meets the future. Claims about AI boosting productivity and reducing inflation come under fire. But hold on, the pushback is immediate. Is this real transformation, or just hype driven by financial interests? That's the concern. Because if the narrative is inflated, markets could be reacting to illusion, not reality. And just like that, the hearing ends not with certainty, but with doubt about influence, about independence, and about whether the future being sold is actually real